Hong Kong's deficit for this fiscal year is expected to reach nearly $100 billion. Financial Secretary Paul Chan has pledged to cut expenses and focus on public works to rebalance the budget. But is that enough to fix the snowballing debt, or can it get worse? Joining us are Gary Ng, Senior Economist at Natixis, and Caspar Tsui, the Executive Director of the Federation of Hong Kong Hotel Owners. Thank you for joining us. Let's start with Gary. So the latest deficit estimate at 100 billion Hong Kong dollars was similar to the level in 2023 to 2024. So what does it tell us about the economy in Hong Kong?
Well, I think first, if we look at this number, this is indeed a number that has been actually underreported to a certain extent, because it actually includes the bond issuance that the government has actually done over the past few years. So if we really exclude that part, we are really talking about Hong Kong fiscal deficit at somewhere around 200 billion Hong Kong dollars, which is around 6% of the GDP. So obviously, on the flow perspective, this is kind of stressful because it basically put Hong Kong in a similar situation as the US and also France and Europe, if we want to compare. Then, of course, if we look at it generally about the composition of why the government actually has such deficit, the number one problem is definitely the lack of the growth or prospect in the city, which actually has a spillover effect all the way towards equities, real estate, etc. It basically means that the economy is not doing that well. This is why the government is not able to raise as many revenue as in the past. So I would say that is the number one concern that Hong Kong government has beyond all this discussion about expenditure.
So in addressing the deficit, what other challenges is the government facing? Also, will the government be able to cut the expenses as what Paul Chan has suggested?
Well, it really depends on the determination of the government, because when we look at this overall fiscal situation, we can look at the ways that the government can raise more revenue, which can be, some sort of measures about exploring different taxes, etc., or basically giving more growth prospect. But it is difficult. So beyond that, the other two ways is really about cutting expenses and maybe also raising more debt. So on the expense side, there's many discussion about whether there should be adjustment to the civil servant salary or basically different other sort of expenses. I do think that the government will need to find a better way to make sure that the resources that it has is better allocated. It is not really only about cutting expenses, but even if Hong Kong has the room to raise more fiscal debt, it also needs to spend the money wisely. It's not really only about spend more, but also spend smart. So I think this is really the key that the government will need to look at in the future. And I do think it's quite difficult for this problem to be solved maybe within the next 3 or even 5 years. But this should be the direction, going forward. The government will need to cut expenses. It will need to spend wisely.
Are there any examples that you think the areas that the government can focus on cutting the expenses?
If we look at the general employment situation in Hong Kong nowadays, especially when we compare to what happened before COVID, or even all the way to, I would say, the peak of the Hong Kong economy at 2018, we do see that the government has actually expanded the headcount by around 4%. This is actually quite contradictory to what we see in the private sector. There is indeed a 5% decline in the number of jobs available. So this basically shows that the government has expanded the number of employees. Then, whether these people are actually doing their job in a very effective way, the government has been investing in digitalization. Is there any ways that, these employees can be transferred to other jobs to fill some of this headcount that, the government has recently? I think this internal resources reallocation and efficiency will be very important for Hong Kong to actually tackle this structural challenge in fiscal deficit, or at least one of the ways to tackle that.
So for Caspar, the government has resumed the hotel tax to boost its income. How's the market responding, and do you think it can actually boost the government's income?
I think it's more of window dressing to show that they are doing something to create more revenue streams of getting more income for the government. but looking at the competitiveness surrounding basically the regional markets, any increase in price is going to hurt the overall attractiveness. Not only leisure tourists, but we're looking at Hong Kong. It's basically positioned as a very nice meeting, exhibition, and events center. That's going to, scare off some corporate meetings coming to Hong Kong. Not to mention, I mean, we're basically doing everything we can to enhance the Hong Kong offering with the mega event and the list of big conferences coming to Hong Kong. I think the tax itself is probably going to neutralize everything that we've been trying to do. But we will still need to observe and see how much of a negative effect it's going to have on the entire trade. But looking at the central government, they've been doing a lot of work in helping Hong Kong, getting ourselves back on our feet. But we need more overnight tourists. Now, we look at the number of overnight tourists is close to about 17, 18 million people coming in the past 2 years. It's not back to the peak in the 2018-19 level. But why overnight visitors are so important? Because on average, if they spend $6,000, $7,000 overall per night in Hong Kong, that's going to inject billions of dollars, not just in hotel, retail, food and beverages, and all the other servicing sectors. So we should be looking at what we can do to enhance our Hong Kong attractiveness. We still hope that the government can continue to invest. It's how they invest. Are the return on investment worthwhile on the infrastructure? Are we continue to enhance our strength so that we are still one of the more attractive local travel destination or meeting destination? We have the best logistic, basically from air to sea to land. Are we utilizing that? But the surrounding cities and regions, they are also catching up or trying to surpass us. So talking about cost cutting, but we also should be looking into how we are investing the money that we have so that we stay competitive.
In what aspects of tourism do you think the government should invest more?
Well, I think infrastructure. Yes, we talk about the panda economics, but it's kind of like you talk to some theme park, they have a new theme coming. Are they going to last for the next 5, 10, 20 years? We have airport, that's important. We have the cruise terminal, that's important. But do we have enough meeting and event venue? Yes, we do have the Kai Tak Sports Park. That's 50,000 stadium. But you look at Macau, they have smaller venues. If you look at concert goers, we've been engaging them a lot. What's the average venue that's going to be the optimal size? Usually when they talk about it, it will be 10 to 30,000 people stadium, which we lack in Hong Kong. So these are some of the infrastructure we still need to evaluate. Not to mention, if we're promoting the luxurious market, do we have the private jet airport ready? Do we have the yacht ready? I mean, these are the infrastructure that we will continue need to build up. If we're talking about attracting investors from the Middle East, high spenders, family office, where they want to go to places to enjoy themselves and also invest, find a place to invest. I mean, we have some of the best content as well. I mean, if you look at not just hardware, every year we have early in the year, we have the financial conferences. We have arts and cultural, not to mention the West Kowloon, but we have the Art Basel. The trading, it's huge amount. These are the attractiveness that we have. That's so unique. We have continue to have a very low tax system. So any raise in taxes, that's really confusing. So looking ahead, we still see the strength in Hong Kong, but are we promoting our strength enough? Are we continue to invest so that we stay ahead? These are the things we should be looking into.
Okay, so to wrap up our interview, Gary, as the government is going to cut the expenses, what do you think the residents and the businesses will see for the coming budget?
Well, I do think the support will be less than before because the government will need to decide where to spend in a more selective way. So unfortunately, it's likely to see that Hong Kong will be in a scenario that economic growth will decelerate this year. At the same time, inflation may actually go a bit higher because there could be, phasing out of certain tax breaks or subsidies and etc. So 2025 will not be an easy year for Hong Kong. But having said that, if there are businesses willing to invest in some of the areas that the government is promoting, for example, it could be family offices and etc., then there could be, a more tax incentive or at least different sort of support given by the government. But in general, because of the limited government resources, it will not be easy.
For Caspar, as an industry player in the tourism field, what do you expect to see in the coming budget?
Actually, we don't expect much. Actually, less could be more. You attract investments to Hong Kong. That's what we need. We already have some of the top service industry. Hospitality-wise, hotels, we are one of the top in the world. So sometimes, when you talk to the government, maybe you should do less and just give us a clear direction, and the commercial sector will take advantage of what strength we have in Hong Kong. So yes, we have very little expectation on the budget this year. But actually, we want the government to actually do less this year, so that give us more room. But of course, doing less means also, reviewing the tax structure as well. So give the business more room to breathe. It's a difficult year, continuing onwards to 2025 and 2026. We're still very cautious of the situation. The global economy, it's still hard to predict. So we want the government to really understand what we're facing and hope to, give us as much support as we can and less policy that's going to disrupt our operation or cause us to spend more money or require more labor. These are the things that we really want the government to really look into.
Thank you, Gary and Caspar. For more on Hong Kong's deficit, head to our website at scmp.com.